Anil Sehgal joins us now to answer your insurance-related questions. Anil, our question comes in this week from Vikas Jain. He's 33 years old and he has an income of 6 lakh rupees a year. He wants to buy a term plan and he wants to choose between Aviva's iLife, Aegon Realige's iTerm and HDFC's Click to Protect plan. He also wants to know if these plans are safe. He's worried about what might happen if the company shuts down. Now, with the stringent regulations we have in the Indian insurance industry, is this something that customers should be concerned about?
The three plans that you have selected are among the best online term plans, the most competitive online term plans that there are in the market. So you could effectively choose any one of these depending on your comfort level with the company, the brand, and the service and so on. So it's really a personal choice. In my view, online term plans offer the best proposition to customers. They are cheaper, they're easy to buy. There are no issues as regarding whether the claim would be differently paid on an online term plan versus an offline plan because you cannot kind of discriminate in that fashion. You would basically have to complete all the proposal details correctly, go through the medical if it is required, and if you declared everything truthfully, there should be no issue at all as far as claims is concerned. The IRDA has a mandate to look after what policyholders' interest, and they monitor solvency and other things for companies. If they feel that there is anything which is not quite correct, they can ask a company to capitalize themselves and make sure that there is enough there to meet any liabilities. In the event that they feel that the company is in default, they can take decisions, for example, taking over the management of the company, appointing an administrator, and so on and so forth. So I think there's enough that the IRDA does to look after things. On top of which the Insurance Act itself provides for transferring a company's assets and liabilities over to any other company. Much like you might have seen in the mutual fund environment or the banking environment, you typically don't see customers lose out as much when the regulators are involved and overseeing. And the shareholders have a liability to make sure that the liabilities as far as their promises to the policyholder are met to the maximum extent possible.
Our next question comes in from Tukaram, 33 years old again, annual income of 7 lakh rupees. Now he tells us he had 3 policies from LIC, one of which lapsed, the other 2 he surrendered. He wants to now buy a term plan from LIC with a cover of 50 lakh rupees. He wants to know if his history with the other policies will stand in the way of him getting this term plan. Also, Anil, tell us if LIC is the best option for a term plan for him right now.
Tukaram, to answer your question very simply, if you have existing policies which have already lapsed or you have surrendered them, there is no impact on you taking any new policy. You typically have to declare to an insurance company what policies you already have in force. That is from a perspective of the insurance company seeing that there is not an over-insurance that you're taking. You can declare to them that these policies have lapsed or surrendered, and there should be no impact on you taking a new policy. The only thing that the insurance company will consider is whether you have sufficient income to support a 50 lakh rupees sum assured. So typically if you have a 3 to 5 lakh rupee income, that should not be an issue at all, and you can go ahead and apply.
We have time for one last question. Deepika has written in from Chennai. She does not have health insurance for either herself or her parents. She wants to know what health cover she should take to cover her family of up to 2 lakh rupees. Anil.
Deepika, for your parents, please consider senior citizen health plans. What you can look at is the National Insurance Varisht Bima Mediclaim. You can look at the Bajaj Allianz Silver Health and the Star Red Carpet plan. These senior citizen plans typically have a lower waiting period, which means that whilst other policies available for their age group might have a waiting period of 4 years, the senior citizen plans will have a waiting period of only 1 year for pre-existing illnesses. At a higher age group, you should certainly look at these kind of policies. So look at these 3. Keep in mind that some of these policies may not will cover hospitalization but may not cover OPD type of benefits, and might have some sublimit related clauses in terms of the sublimits on various types of claims or expenses during hospitalization. So keep that in mind and accordingly assess the 3 policies and what suits you best and take a decision.